Hi, my name's Todd. I've worked in dealerships about 30 years. I process about 3,000 credit applications a year. And these are a few things that you should do before applying to give yourself the best chance of being approved. I process applications every day. And one of the things that surprises me the most is the percent of people that apply that obviously have never looked at their credit report or their credit score. If they would have looked at it or had any idea what they were looking at, they wouldn't have applied. And the irony is we live in a world where this information is more available and less expensive to obtain than ever. When I first started in this business, there wasn't even such thing as a credit score. Your credit report existed back then, and loan analysts would look at it and evaluate all kinds of different aspects of it, but there was no scoring system. In today's world, the scoring system often trumps all of the other aspects of your credit history. So these are some things that you should do before you apply to give yourself the best chance of being approved. The first thing that you should do is actually look at your credit score, obtain it. And a lot of people don't even know how to do that. There are free and very inexpensive services that you can sign up for to get this information. The most marketed is Credit Karma. Credit Karma is free, it's easy to sign up, and it gives you all kinds of information that would be very useful to know before applying for a car loan. Experian also offers free and low-cost services to obtain their credit report. There are three, by the way: Experian, TransUnion, and Equifax. And different lenders use different services. And each of these services provides many different kinds of credit scores depending on the industry who is obtaining the information. So when you go to get a mortgage, your credit score is different than when you go to get a car loan or when you try to get a credit card. All of these scores are different and they are tailored to the industries that are using them. I'll put a link in the description for Credit Karma, for Experian. Also, CreditWise contracts with Capital One. So if you have any dealings with Capital One, whether it's a credit card or a car loan, they're probably soliciting you to sign up for CreditWise. It's free. It provides you with a lot of the same information as the other two services I mentioned. If you obtain your credit information and find out that you don't have a score, you've never had a credit card, you've never had a loan, or you haven't had any of these things in quite a while, there's a chance you don't have a credit score, and it is going to be very difficult without a credit score for you to get a loan. The good news is we live in a time when getting credit has never been easier. Many services offer no fee secured credit cards. What that does is it gives you the equivalent of a debit card, but that debit card reports to your credit bureau as though it is a credit card. Chime Bank, which is an online bank, Bank of America, both offer these types of cards. There are other lenders that do. I'll put a link in the description for Chime and for Bank of America. There's no shortage of options for this, and this is a way to start your credit journey. This won't cost you any money. It doesn't cost you any interest. There aren't any fees, and it will, over time, a relatively short time, about a year and a half, it will get you a credit file. The next thing to take a look at is if you have any delinquency on your credit report. Delinquency is late payments. So if you have a credit card or a loan and you've not made the payments on time or not made the payments at all, there are going to be levels of delinquency reported on your credit report, and those levels have differing severity, and they affect your credit score differently. So if you miss one payment, but then bring that account current, it will negatively affect your credit score, but it will eventually repair itself and get you back up to where you were. If you continue to not make the payment, it will continue to negatively affect your credit score, and the longer that goes on, the longer it will take for you to repair or bring your score back up. If you have delinquency on your credit score, the fastest way to rectify it is to pay it. Bring the account current or pay it off. If you do that before applying for your loan, you are more likely to get the loan. So if you pull your credit score and your credit score is below 650, it is not impossible for you to get a loan. But the loan that you are likely to get is going to be very expensive. It would be in your interest to do everything that you can do to get your score above 650 before applying for the loan. Once you've got your score over 650, if it falls between 650 and 725, your best bet to get the least expensive loan when buying a car would be to be approved with your credit union. The reason for that is, if you go to the dealership with that credit score, you are likely going to have to choose between a cash incentive or a promotional interest rate in order to get a low interest rate. So you'll have to give up, for example, $1,000 cash incentive to get the lower interest rate, because the standard interest rate that they'll offer you with that credit score is very high. And what most people do is they choose the promotional interest rate and they give up that $1,000. But what maybe they don't know, or they're not told, is that if they would go to the credit union, credit unions have several credit tiers depending on your credit score. But almost all of those credit tiers have a lower interest rate than the standard rate that will be offered to you with a credit score between 650 and 725. So if you go and get the loan with the credit union, you'll get not only a lower interest rate, but you'll also get the cash incentive. So you get kind of like the best of both worlds. If your credit score is over 725, you'll likely have your choice of several market competitive options. You can choose to just go to the dealership and utilize either extremely low promotional financing or standard rate financing and cash incentives in combination, because the standard rate financing options for somebody with your credit score are still very good. But it still might be in your best interest to go to a credit union, because their premium rates are even better than the standard premium rates at the dealership, and you'll still get to take advantage of the cash incentive. You shouldn't give up the cash incentive to get low interest, especially if you have good credit. Now, the last thing I want to address is it possible to have a high credit score and still not qualify for the loan? Yes. That most commonly occurs when someone has either a very limited credit file or a credit file that hasn't gone back very long, is not very old. In the industry, that's called a thin file. It kind of falls through the cracks on the credit score system, and somebody can have an exceptionally high credit score, but not have the credit history necessary to qualify for the loan. If that happens, the most streamlined approach would be to add a cosigner. That would be like a parent who would sign with you. They would sign on the loan with you, and they would be financially responsible in the same way you are. So if you don't make the payments, they're responsible to make sure that it gets paid. And if it doesn't get paid, the delinquency that'll show on your credit report will also show on their credit report. So it's important always to make sure the payments are made, but it's doubly important if somebody has vouched for you and is putting their good credit history on the line for you. I hope this kind of gives you a basis of understanding that'll allow you to take these steps and be a little bit more prepared when you're applying for that car loan. Any one of these steps can allow you to change your credit score a great deal. Paying a delinquent account current can change your credit score 100 points. And that's the difference between being approved and not being approved. It can also be the difference between getting a good interest rate and getting a really bad interest rate. So take a look at the description. Look at those links and take these steps and save yourself the headache and the cash. I hope this was helpful. If you like the video, please give it a thumbs up. It helps with the algorithm. If you want to hear a little bit more, if you want to hear more videos like this, subscribe to the channel. I hope to provide weekly videos in this regard. Thanks for tuning in.